Thanks for watching What to Expect When You're Expecting. To buy Philadelphia area real estate, of course, with me, Stacy Sanseverino, your realtor and wealth building advisor for life. In this session, we will address what title insurance is and whom it protects. Title refers to ownership interest in a property and is reflected in a recorded deed. Unlike homeowners or car insurance premiums, which are paid annually to protect you financially for events that may occur in the future, title insurance is a one-time premium that covers the title company's research that the seller is the legal seller of the property and that all debts have been cleared from against the property by the time you become the new owner. At closing, you as the buyer will pay a one-time lender's policy and a one-time owner's policy premium for title insurance. The lender's policy protects the lender's financial investment in the property, and the owner's policy protects your financial investment in the property in case there is a later successful claim for ownership of the property. In order to issue the title policy, the title company, also known as an abstract agency, hires researchers to go to City Hall to review the history of the ownership of the property in the public records to make sure that the chain of title is intact. Based on their research, one of a handful of national underwriters like Stewart Title, Old Republic, or Commonwealth will provide the actual insurance policy. In Pennsylvania, the title company also handles the complete transfer of ownership of the property. They make sure all the right paperwork is signed and filed with the right governmental bodies and financial institutions, and that all the money flows from and to the parties that need to pay and need to get paid. In Pennsylvania, our closings happen in person, usually at the buyer's agent's office, with the title agent, the buyers, the sellers, unless they sign their paperwork in advance, the realtors, and sometimes the buyer's lender and or attorney. As the buyer, you have the right to choose your title company. Since the title insurance industry is so highly state regulated, the premium is based on the sales price, and since communication, follow-through, and understanding of local procedure is key, I will recommend you use one of a handful of title companies that I regularly use, since they don't charge you any extra fees and they will bend over backward to do a good job for us. It is easier to overlook the importance of title insurance or even remember 2 years after your purchase what it was for. Here are 2 cautionary tales about title insurance in Pennsylvania that can save you future headaches. The first is about lot boundaries, and the second is about tax share of sales. Lot boundaries are not insured in Pennsylvania unless you get a survey. Many of our property lines have been fenced for decades and seem obvious, and yet there are times when there are no fences, or you may back up to a developable lot that you later learn has claims to some of your land and your neighbor's land because they did a survey in order to build and you didn't. The way to protect yourself when there's any doubt is to get a survey when you buy. So in Philadelphia, there are 2 kinds of sheriff sales that force a property to be sold at auction. One is a mortgage sheriff sale where the bank has foreclosed on the owner for failure to pay the loan and is seeking to recoup as much as they can through the sheriff sale process. The other is a tax sheriff sale where the municipalities owed back taxes and they are seeking to recoup their loss. There is no concern about mortgage sheriff sales regarding title unless you are being offered a free title insurance policy by the bank who has foreclosed upon the property and is now selling it to you, also known as an REO, real estate owned. If they offer to pay your title insurance, they are most likely only offering to cover the lender's policy. So you want to make sure that you are getting owner's policy when you're buying a property that was sold at a mortgage sheriff sale. And you're now buying it from the bank. So the concern with the tax sheriff sale is that there's a right of redemption period that allows a homeowner to come back up to 9 months later to reclaim their property if it was sold at the tax sheriff sale. If proper notice wasn't given to the owner, which is a common current occurrence in our fair city, that right of redemption period can be claimed over a much longer period. So few to no title insurance providers want to insure such a property because of the risk. This means that if you buy the property without title insurance and the original owner successfully redeems the property, you have no financial protections for your purchase or the improvements you may have made in that time frame. Under certain circumstances, there may be an abstract agency that will get you title insurance, but it may not be considered good and marketable because of the tax sale defect. Good and marketable title is the highest standard of title, and since this title was just considered insurable, the next buyer might have an issue with the prior defect. The bottom line is that title insurance protects your ownership interest in the property you are buying, and the title company is the neutral middleman to make sure that the transfer of ownership is seamless and takes place properly. Since in Pennsylvania, title insurance is highly state regulated and the policy premium is based on the sales price, we will recommend the title company that will make you 100% happy with your home well beyond settlement so that you brag about us to your friends, family, and coworkers, since referrals are the lifeblood of our business. Now that you know what to expect when you're expecting to buy Philadelphia area real estate, of course, please leave a comment below. We'd love to know what you think.